Good afternoon. Good afternoon. It's Monday, the 24th of March. Welcome to another edition of Monday Market Picks. I'm Thilan Wickramasinghe, the head of research for Maybank Securities here in Singapore. The markets are mixed, trying to figure out what Liberation Day is. Just to catch you up, Trump says that April 2nd is Liberation Day. That's when the US administration will enforce targeted reciprocal tariffs on the worst offenders in terms of the US trade balance. ASEAN actually might be a lot more vulnerable than what we initially expected. So amidst such dark clouds, we are going to be focusing a lot on stock picking today in our show. But first, we're going to have Dr. Hak Bin Chua joining us to talk us through what the implications of Liberation Day is, particularly for our region. Then we go on to Jarek, who has Opportunity Plus stock, where he's just upgraded the target price on, and he's saying buy more. Then we are going to talk to Krishna, who's going to be talking to us about ST Engineering, which has been on a tear recently, and he still remains quite bullish on the stock. We're going to hop over to Indonesia, where we got Etta Putra, who's going to be talking to us about GoTo, particularly with a lot of the news flow that's coming out of that market and why he remains quite bullish on the stock. We'll have a little bit of a discussion on Singtel, and also have a buy as well as a trading sell from our chart guy as well. But let's start with Hak Bin. Now, Hak Bin, welcome to the show. There's been a lot of competing announcements and retractions from the Trump administration. So can you catch us up on what this whole Liberation Day is? And let's start from there.
Hey, hi, Thilan. Yeah, so Liberation Day, well, that's on 2nd April, is I guess what Trump sees as retribution, of the unfair world that he says has been, impeding the U.S. manufacturing and trade sector. So the expectations are that he'll announce a broader range of tariffs across a far wider number of countries. And I guess the debate is, who are these countries that he'll be targeting? That will face this reciprocal tariffs. It looks like more ASEAN countries could be caught in this web, and I think in particular, I think if it's just targeting the 15 worst offenders, what he calls the dirty 15, this will be the top 15 countries which have once the largest bilateral trade surplus with the US. That would capture Vietnam, Thailand, and Malaysia. So I think almost for sure these countries will be included. It's not quite sure whether the other ASEAN countries will be. So I think that's the real concern.
Right. So I mean, I think that's a real issue here now, right? I mean, when Trump administration first came in, we thought he's going to be pretty busy with bigger fish to fry, with the sanctions or tariffs against Mexico, against Canada and China. Now it seems to be broadening, and a region which we thought was going to be fairly secure, which is ASEAN, is now kind of being targeted. So what do you think will be some of the worst case scenarios here?
So the worst case is that he announced a broader number of countries that be included. It just goes beyond the top 15, the dirty 15 as he calls it, and applies that formula which he highlighted. It could include all ASEAN countries, right? Because if it's going to be based on 5 different areas, the value-added tax, the non-tariff barriers, the tariffs that you impose on US products, the currency, as well as unfair practices, that would almost catch the whole web of 6 countries, 7, 8 countries in ASEAN. We try to rank some of these countries based on the tariffs they charge on US imports as well as the VAT. And of course, if you do it by that ranking, actually Indonesia is pretty high, 16% or so. Philippines could be 15%. On the bottom will be relatively lower, will be Singapore, but still about 9%. Singapore has almost 0 tariffs on US goods. Singapore has a bilateral FTA agreement with US. Singapore also imposes a near 0 rate of tariffs on US imports. And yet, if you want to include the VAT tax, then Singapore could be subject to that 9%. Malaysia as well will be slightly above the 9%. And of course, if you want to pick about currency, currently Vietnam and Singapore are on the US Treasury currency watch list. So we don't know the scope of this reciprocal tariffs, but for sure, I think Vietnam, Thailand, and Malaysia will be included. But I think the one that we really have to watch out for is actually the 25% duty on semiconductors, because that would hit Singapore and Malaysia pretty hard, and given the number of listed companies that may be exposed to that as well. There's talk in a Bloomberg article this weekend that may be delayed, as well as the 25% duty on pharmaceuticals, which will also hit Singapore hard. But they may still go ahead with the 25% duty on autos, which will have some impact on Thailand more so than the other countries. So there's a lot on the table that could come, and also depending on the scope that he plans to deliver first, on April 2nd.
Right. So much uncertainty. In fact, I mean, I think the tech manufacturing sector in Singapore, that's one of the key sectors where we have a big underweight on, particularly because of a lot of this uncertainty around tariffs as well as demand. Now, Hakwin, any silver linings at all that we can look at?
I suppose there's two that we highlight, not enough to completely negate, what Trump might announce on April 2nd. But one is that the US has announced a pretty hefty, duty increase on China goods, right? So the additional 20%, which has already come into effect, right? So by our calculation, that raises the duty on China imports to about 32%. So that's quite high. And that actually opens up the gap with ASEAN. Remember, even at the previous tariff rate, a lot of the firms were already relocating, reconfiguring ASEAN because they were affected by that hefty 25% or so based on that 350 billion of the US imports from China. This blanket 20% applies for everything now. And so that should be for ASEAN's advantage if the rate on ASEAN stays at zero, right? But come next week, it really depends on what the tariff rates will be applied to on the individual ASEAN countries. If you're going to apply at 20-30% on Malaysia, that kind of takes away almost that advantage, right? It's going to be low, like 5 to 10. I think that's doable and will still be, to ASEAN's advantage. The second one is, of course, China's retaliation. China has retaliated on the US tariffs, but a lot of it is on US agricultural imports, and of course it's not of the same scope or scale. So that could boost Chinese demand, particularly from some key ASEAN products. The one that stands out is basically seafood or poultry. Some of the exporters in that space might benefit from those higher tariffs.
Got it. Thank you, Hagbin, for that explanation. So there you have it. There's going to be a lot of moving parts between now and the 2nd of April and beyond as well, given how we have seen the Trump administration continues to impose tariffs over different trading partners. So I think it's very, very important that in times like this, that we look for stocks which have very strong fundamental stories, very strong fundamental upside that can help ride that storm. One stock that we are highlighting is ISOTeam, which is a painting contractor in Singapore. Jarek has this stock as a Opportunity Plus, which is our highest conviction stocks, and he's just actually upgraded the target price by 16% and is reiterating his buy call on that. So Jarek, you've raised the target price on this stock. You're reiterating buy. What's driving this confidence?
Hi, Thilan. Yeah. So basically, I think I did some channel checks recently. I spoke to quite a few listed contractors, and I think that with the pipeline ahead, you have MBS expansion and RWA expansion. This has not been seen since before during the GFC days when MBS and RWS started their construction in Singapore for their integrated resort. So basically, I think this construction boom that we are seeing has it's been 10 plus years since this has came. And I think if you look at the public projects, government projects like your port, the Terminal 5 and all this will come at around the same time in the next 2 to 3 years. So with that, there will be a lack of supply because, a lot of contractors actually went bust during COVID. So with the demand increasing so much, supply will be constrained. So we think that margins going forward will likely, be quite positive for the remaining big players in Singapore. And if you look at ISOTeam, I mean, this year, that is the election year. The government has also, mentioned in the budget recently that 50,000 new HDB BTOs are slated to come out in the next 2 to 3 years. And with that, there's also a lot of government projects that are being tendered out as we speak. And we think more will come through. And with ISOTeam will be a key beneficiary of this trend. So basically, if you look at also, I mean, the boss, the CEO actually bought shares last Thursday and last Friday at about 7.55 cents. That is despite the share price, doing very well already for this year and also last year. So we do think that that's also a very strong vote of confidence as well. And if you look at our PE range, basically we do think that the PE for ISOTeam remains quite low. It's a June year-end company, so basically by August they report their FY25 results, and we look at the FY26 going forward. So basically, I wrote forward my TP for blended FY25-26 from 24-25, and that has resulted in a raise of my target price to be about 10.4 cents as compared to 9 cents previously.
Got it. So any catalyst that we should be watching out for in the near term?
Yes. So I think if you look at it, I think contract wins should be more frequent. So the last contract win they announced was 1 month plus ago. We expect also, contract wins likely to come through, in the next few weeks. Probably they'll win. I think they'll win at least about 30 million of orders, and that will boost their order book by another 20 to 25%, which will also make their order book to a record high level. And we do think that more projects will come. The frequency will be faster. So previously they announced orders, I think every 3 to 4 months once, but now we think that there's a big potential that is every two plus months there will be new orders because it's an election year, and also the next catalyst would be also their drone painting. They are doing their drone testing at a BTO site in around April-May period. So if this testing is successful, then it will be launched or rolled out into more of their projects going forward, and that will result in cost savings about 40 to 50% in terms of manpower and equipment savings. So that will also be a key catalyst for ISOTeam as well.
Okay, so watch out for that drone painting announcement going commercial, as well as more order wins. Thanks,
Yep.
Jarek. Buy on this
Welcome.
stock with a 10 cent target price as well. Now, let's move on to Indonesia. I mean, this is a market that has been on a bit of a weakening trend over the past few weeks. There's a lot of policy uncertainty there. But I want to bring Etta on the line. Etta, you've raised GoTo's target price by around 14%. I must point out that, this is one stock in Indonesia which has actually been outperforming the sector, the overall market index really, really well over the past few weeks and the past few months, actually. So can you highlight what's driving your very bullish view on GoTo?
Well, first, we've seen an improvement on the operational level. Their GTV on payment services rising by 13% last year, and we expect to increase by 11% this year. And second, the profitability also improved due to marketing efficiencies. Now, actually, on the mobility is only GoTo and Grab competing in the market, while on the food delivery, we only have 3 players, with now Shopee is expanding on the mass market. But when we do on the ground research, we found that their pricing is more rational compared to others. So I think in terms of profitability, we sense a trajectory to achieve its target. And during the last result, their target, they beat the target. So they book a positive adjusted EBITDA, so profitability improving, while they also have a expansion on the lending side, which is also a will be a profitable business. And lastly, that they also no longer in the cash burning e-commerce market. That's what fundamentally driving the share price. And from the market sentiments, they're talking about Grab and Gojek merger.
Yeah, so that's one area that I want to kind of put a pin on. Is this Grab and Gojek merger? Can you give us some view on where do you think this is going? Do you think this will happen? And if it does, How will this change your view on GoTo?
So currently, there's no official statement from the company about the potential merger, but looking at the recent news development, I think there's something is progressing, and looking at the sentiment, there are two concerns actually from the market. One is about the concern about the competition. When we think this is no hurdle from the regulation side in Indonesia, because if we aggregate the transportation, the on-demand service is quite small compared to total transportation business. And the second is about the price of the merger. So this is a quite bit tricky because it's subject to the business size, whether this is a partial negotiation or as a whole company, because GoTo is consists of three company. One is the mobility and on the food delivery. Second is the financial services, and third is the ownership on the e-commerce. So price will be a key determinant in the future.
Got it. Got it. Etta, thanks so much for joining us. Now, let's go back to Singapore and let's bring Krishna in and talk about ST Engineering. He's got a very bullish view on the stock. They had an investor day recently. So, Krishna, let's start there. What were the key highlights from the investor day?
Thank you, Thilan. Thank you very much for having me. So the key highlights basically include the management guiding investors and sell-side analysts towards their medium-term top line and bottom line growth. They also shared the key drivers that will enable that growth for the various business units. So I think there is that ongoing emphasis on capturing more market share in the international markets, especially for defense. And also using some of the dual-use technologies for more of the commercial assignments, for example, in the smart city projects. So that was broadly what the investor day was all about. They had last done in 2021, so it was an welcome update this time around.
Got it. Now you've raised your target price to $7.10, but we've had the stock having a very explosive run so far. So, how are you thinking about the stock now? Do you think there's more upside catalysts and upside risks?
Yeah, so I think there are two main sources for upside risks in the medium term, and obviously the stock has done quite well. What we think the two main sources are broadly into two categories. One is on the fundamental side, and other bit is on the valuation side of things. The first up is on the fundamental side of things. We think that a stronger order book growth will enable some of the re-ratings on the fundamental side. So that includes a bit more of the defense contract wins, and also they have some pipeline in the smart city projects as well. The second bit on the fundamental side includes the margin expansion. I think that was one of the key highlights from the investor day. And I think the savings that management is guiding in terms of procurement, the productivity gains by various offshore competency centers, and as well as the improvement in the working capital cycle, I think that is another key driver on the fundamental side. On the valuation side, I think if you look at the global aerospace and defense names, those are trading at a much higher premium compared to ST Engineering. So I think there is that room for re-rating if this continued the geopolitical uncertainty continues. And the second bit which I wanted to highlight is that management has given a guidance on their dividend policy in the medium term. But if you look at the surplus cash generation, then there is potential to pay out more. So those, I think, are the key factors that will result in some of the upside risks in the medium term.
Got it. I mean, I think globally, as countries start to rethink about defense and start rearming, this is definitely a stock to keep an eye on. Thanks, Krishna. Now, I just want to briefly touch on the Thai market, which has been in a funk lately. But Hussaini is highlighting a bright spot there in terms of new data center capacity. The Board of Investment in Thailand has approved about 350 megawatts of new DC capacity there, mostly for Chinese operators. This could actually make Thailand the next frontier for data centers in ASEAN. Bangkok only has about 105 megawatts of installed capacity. And when you compare to Singapore or to Jakarta or to Johor, you got installed capacity of between 278 to more than a gigawatt of capacity. So there's a lot of headroom to grow capacity in Bangkok. One potential beneficiary will be Singtel. As a company, Singtel has a lot of regional ambitions to growing their data center grow capacity. They've got new builds coming up in Singapore as well as Indonesia and Malaysia. And they've got a lot of, a know-how and ability in terms of network connectivity, undersea cables and things like that. Companies paying out a lot of dividends as well, capital recycling. So I think if you want to look at playing the overall data center capacity theme in Southeast Asia, which I think will be a structural theme in this region for a while, Singtel will be one of the most cleanest plays to look at that. Now, with that, let's jump on to technicals. We've got two ideas from our chart guy. We've got MTQ, which is a trading buy. MTQ is establishing a new uptrend, and our chart guy thinks that the recent rebound signals a potential for further upside. We also have VALUETRONICS Holdings, where our chart guy has a trading sell. Their current uptrend is losing momentum, and there is going to be the bearish divergence is becoming a lot more evident. So he's calling for a trading sell there. In terms of upcoming events, we've got the inflation rate coming out later today. We've got industrial production for Singapore out on the 26th. Bank lending will be out on the 28th. And retail sales, which has been pretty weak in Singapore recently, will be out on the 4th of April. So those are some key numbers that we'll be keeping an eye on. In terms of events, we've got a monthly macro call on Thailand, which might be of interest given where the market is going right now. So do contact your salesperson if you're interested in listening in on that. With that, we are out of time. Thank you so much for joining us. We won't be on air next week, given that it's a public holiday, but our newsletter will be out on Tuesday next week. And then we'll be back as usual the following Monday. Thank you so much for joining us. Thank you for your support, and have a profitable trading week.